Next up we have Dave Reeves, who's the Managing Director of Calidus. So Dave's a mining engineer with 30 years of experience in the mining industry, predominantly in the precious metals sector. Dave has been involved in the development of 3 mines and has extensive experience in international capital markets through his involvement with various listed London and Australian companies. Thank you very much, Dave.
Thank you, Jane. Good afternoon, everyone. Great to be back here, 10 months since the last update in October last year. And a lot's been happening. October last year, we had just started putting in access tracks to our Warrawoona Gold Project, and as you can see on the slide in front of you, it's now well underway with construction. Take a good look at that picture. There'll be a little video up later, maybe not quite as good as the one you just saw, but a little video up later that shows the progress. This is taken 2 to 3 weeks ago, 1 tank shuttering around the crusher, etc., and just the progress on site has been amazing to watch. So just to introduce you to Calidus, if you don't know us, we're developing the Warrawoona Gold Project in the Pilbara of Western Australia. We will be Australia's next gold producer, which is very exciting, and that will comprise of stage 1, which is a 90,000 ounce per annum gold mine, all in sustaining cost of around $1,300 an ounce, and first gold will be poured in the second quarter of next year, early in the second quarter. Once we've bedded that down, we'll kick off our stage 2 development. That's bringing in the ultra high grade blue Spec deposit nearby. That will ramp us up to 130,000 ounces per annum, and be quite a significant gold mine in Western Australian context. All of this is based on a 1.7 million ounce resource base, and most importantly, a management team that's been there, done it all and seen it twice. And just on that, between the group we've assembled, I think we've developed 7 or 8 mines. We've got 3 first-class mine managers tickets. We've operated mines, and that's what we are doing at Calidus, is building and operating. Market cap, just under 200 million, so we see lots of upside in that. Alkane, major shareholder, just under 10%, been hugely supportive on our journey. And I think most importantly, board and executives have major skin in the game. We want to make this a success. It certainly helps our retirement into hopefully a travel allowable future. So where are we? When we look at the Pilbara, we're in the East Pilbara, just near Marble Bar. And if we look at the Pilbara today, it's always been known as an iron ore area. More recently, I think gold is really shining here. You've had the 2 most recent gold developments in Capricorn and Novo, commissioning their mines in the last 6 months. De Grey had a fantastic discovery in the West Pilbara at Hemi, and we are constructing at Warrawoona and will be the next gold miner. So the Pilbara is certainly shining as gold, and certainly on the back of the iron ore, we're leveraging into fantastic infrastructure. So we've got bitumen roads all the way to Marble Bar, a communications tie to Marble Bar. LNG will be coming out of the Northwest Shelf. So being able to tap into that infrastructure certainly helps on the capital cost and on the returns of the project. So for those that haven't seen the project before, just a quick recap. Our gold outcrops on this prominent ridgeline out of Marble Bar. So obviously when you've got our gold outcropping like this, it's an obvious play for a large open pit. So we've got a 2.5 kilometre long open pit. And once we've exhausted that, we will be heading underground into a standard sub-level open stope, as you see in many goldfield mines. That underground's only down to 250 metres below surface so far, so a lot of potential below there. And also on a parallel shear called the St George Shear, where we've got a couple of small pits but need to do more exploration. Just over the pit, over the waste dump, we've got a very standard gold processing plant. CIL 2 to 2.5 million tonne per annum, jaw crusher, SAG mill, gravity gold, standard CIL and gold doré coming off the mine site. This is what it looked like a year ago in our imagination, and this is what it looks like today. There is rapid progress. We've got all our diesel LNG power station on the right, the raw water on the left. We fly into the processing area. We've got our reagent alley, and you can see there 2 tanks at full height. That was on Friday. We've now got 3 tanks at full height, structural steel going up. So every day the site is changing rapidly. SAG mill, lubricant, cooling systems in place, getting ready to erect that. And we move through into the crushing area. All of that formwork's down, structural steel going up, and again, it's just such rapid progress. So we're going to zip over the ROM pad and head off to where the mining is, which is on that first ridgeline that we saw. We had our first ore blast the other day, which is very exciting, and you can see the blast holes getting ready for the next blast. We're knocking the top off these hills, widening it out so we can get McMahon's in there with their big kit in March, April next year to feed that mill when it kicks off in the first half of next year. A little bit further down the valley, we've got a tails dam that's coming out of the ground now. In the next 2 to 3 months, that'll be constructed, and all of our focus will come back into that pioneer mining area. So a couple of stills and a bit of a recap. If you have a look at what we've done to date, we're around 50% complete. So we're sort of over the hump. We're heading for the finish line. A lot of the infrastructure you didn't see in that fly-through. That includes a 240-room camp that's fully equipped, the communications, the water to supply that. So there's a lot of other infrastructure that's gone in that time. But really the focus is starting to come back to the process plant, and once that tails dam is done, we'll be certainly focusing more on the mining, building up stockpiles ahead of milling. To be able to get where we are and to be able to get where we want to go, social licence is obviously vital. We are trucking LNG, as I said, obviously better from a carbon point of view than diesel. At Marble Bar, hottest town in Australia, you have to have solar. Some of the things we're doing are a bit unusual for a junior gold miner, cyanide destruction. We do have vulnerable species nearby, so we'll contribute to the Pilbara Offset Fund. And we're also sterilising an area of the ore body, actually, 32 hectares, or down strike of the ore body, as a wildlife preservation zone as well. Fantastic relationship with the community of Marble Bar and the Shire of East Pilbara. We'll be upgrading the Marble Bar Airport in conjunction with Atlas Iron to make that a multi-user public airport, so the local community does benefit. We've got a couple of local contractors from that area on site already. No heritage disturbance at all after extensive heritage surveys, and we'll be looking at some rainwater harvesting to take pressure off the bore fields as well through the Valleyfield Tails Dam. So what's that mean in hard numbers? So we're looking at that 90,000 ounce per annum that we're producing from a 700,000 ounce mineral inventory or mining inventory for that first phase. We're fully funded. We've got $110 million in debt from Macquarie. We've drawn down 25 million of that so far, and we hedged 125,000 ounces at 2,355 an ounce to assist in that process. At that price, our EBITDA is just under 100 million for this stage one. And then we'll be looking at significant internal rates of return post-tax, almost 60%, and that's because of the low capital cost combined with the excellent cash flow that comes off this project. And a lot of that is due down to the geometry of the ore body because it is outcropping. It's all well and good building, but if it doesn't do what it says on the tin, what's the point? So it's all about risk. Tonnes and grade is where it all comes down to. So we've done extensive work on that. We've drilled at 12.5 by 12.5 centres the first year of production. That is almost grade controlled drilling, and the remainder is also on tight drilling at 25 by 25. Because we've got that 2.5 kilometres of outcropping ore, we can move the pit around to access more ore if we require. We don't need to do those major cutbacks that often snooker people along the journey. GR Engineering are doing an absolutely fantastic job at site. They've built quite a few of the recent gold plants, always operate above nameplate. Lots of metallurgical test work, so we don't see any issues there. And then from a costing point of view, we've done things that lock in LNG contracts for 7 years, so no power increases at the plant side. We are seeing labour increases, there is no doubt. Labour price increase, one of our engineers has done some good tweaks to the design to soak that increase up, but it certainly is an area we're operating in and we're very aware of. So we are putting more money into the camp, make it more attractive for people to be part of this team and developing what we see as a very exciting project. So as I said, once up and running, we'd like to get into stage 2, which should only be 6 to 9 months down the track from first gold. And that will be the Blue Spec project, which is 75 kilometres away from Warrawoona as the crow flies. It's a 16-gram ore body. We'll be pulling out just under 10 grams a tonne from this. The project itself divided into two deposits, the Gold Spec and the Blue Spec deposit, and we'll just be putting down a conventional decline, mechanised mining to access those ore bodies, trucking it back to Warrawoona and using that base to process this ore. DFS is underway as we speak, and we hope to have that ready about the same time as first gold. So when we're ready, we can push the button and start developing this. Like to stress both deposits open down dip. Previous owners drilled 100 metres down dip of the Gold Spec resource and averaged around 4 metres at 36 grams a tonne beneath there. Blue Spec itself, no drilling below that resource at the moment, but certainly out to the east, you can see there's some very nice grades there, 11 metres at 7, 18 metres at 4. These sort of grades need to be followed up. From an economics point of view, it's only $28 million worth of capital. That will come from cash flow to fund this expansion to that 130,000 ounces per annum. It adds a lot of post-tax cash flow, almost $100 million of post-tax cash flow to our coffers. So we see it as a natural fit, and as soon as we can, we will be pushing the button on developing Blue Spec. I think the main thing here to look at is the graph. At the top right, it looks like we sort of fall off a cliff with production. I'd just like to remind you, Klondike is open at depth. It's only 250 metres deep. Gold Spec is open at depth. Blue Spec, we've got to the east of that open, so we expect to see that run rate continue many years into the future. But at the moment, we are focused on just delivering stage one. So beyond the excitement of building a mine, we actually have geos still out in the field. We've divided into 3 areas, near mine, regional and Blue Spec. That near mine is a down dip I just talked about. But if we look at, say, Warrawoona Regional, we've flown extensive and detailed aeromag and radiometrics, generated a lot of targets, and the geologists are out in the field now in a very pleasant 30 degrees up there, chipping rocks and hopefully finding the next big deposit for us. So excited to see how they progress during the year. We've just done stream sediment sampling along strike from Blue Spec. There's 8 kilometres of untested strike to the west of Blue Spec, never had a drill hole in it. So they're out there as well doing stream sediment sampling, starting to hone in it with our knowledge base on where we should be looking there. So from a timeline point of view, I mean, there's one obvious one, that's gold. That is going to be in the first half of next year, early in the second quarter is what we're saying. There'll be work going on. There's drilling at Blue Spec, so there'll be some good results coming from there. That's to help with the feasibility study that's underway. There's an active regional program, and certainly, we will be updating the market on progress at stage one at Warrawoona as we continue our journey. So in summary, stage one, 50% built. We're on the home straight now. As soon as that's bedded down, we'll be moving into stage 2, expanding to 130,000 ounces per annum. We are fully funded for both stage 1 and stage 2 from cash flows, with a parallel exploration going on as well. We see some exciting news flow coming from that, and we certainly see a nice re-rate coming for all shareholders over the next 6 to 9 months as we move into pouring our first gold. So we are at booth 58. Please come along, have a chat anytime. Look at some magnificent photos like this, Warrawoona sunset. Actually, it was sunrise, I take that back. And follow us on social media, lots of pictorial updates, and thank you very much for your time.
Pretty close, pretty close. Thank you so much, Dave.